Good day! Welcome to Elred Tutorials. My name is Jared Barrientos.
And I'm EJ Candalla, and we are here to explain to you the procedures on how to make statement of cash flows.
So to start, we are going to define first what is statement of cash flow. So EJ, what is statement of cash flow?
Jared, statement of cash flow is a financial statement which is used by general users that includes internal and external, that provides information about inflow and outflow of cash in the business.
Did you know that some transactions may include buying, billing, and earning revenues and expenses that does not include cash? So these transactions should not be included in the statement of cash flow.
So to fully get in the detail, let's assume that we started a business and let's call it Redeli Real Estate Agents.
So the following transactions are made within the month. For the first business transaction on September 3, we invested 800,000 pesos to Redeli Real Estate.
On September 4, our business bought a second-hand car which cost 420,000 pesos and we made 50% down payment.
The next transaction happened on September 7th, in which the business bought an equipment worth 120,000 pesos.
On September 9, we paid rent worth 5,000 pesos.
Next is on September 14th, in which the business bought office supplies in which it worth 8,500 pesos.
On September 17, we received commission income which cost 120,000 pesos.
On September 22nd, the supplies used by the business worth 5,200 pesos.
On the 26th of September, utilities expenses were paid amounting 18,500 pesos.
So the next transaction is on September 27, in which A bill was sent to a customer which worth 5,000 pesos.
On September 30, our business paid salaries for the agents amounting to 7,500 pesos. So the first thing to do in making the statement of cash flow is to classify the transactions.
To classify, this box can help us.
So the box is composed of different accounting elements, namely current assets, non-current assets, current liabilities, non-current liabilities, and owner's equity.
To determine whether it is current or non-current, the thing to consider is the time when the cash used is converted again into cash. This is called the normal operating cycle, which is for the most business is 1 year.
So in the statement of cash flows, these are classified using the three activities. The current assets and current liabilities are under the operating activities. The non-current liabilities and the owner's equity is under the financing activities. And the non-current assets are under the investing activities.
Let us now classify the transactions. First one is the investment of the owner. Since it is under owner's equity, the activity is under financing.
Next one is the acquisition of car, which is a non-current asset, so we'll classify it under investing.
Another one is the acquisition of equipment, which is also a non-current asset, so we will classify it under investing.
Next is the payment of rent, which is not part of an asset or liability but is a regular activity of a business. So it is under current operating cycle, so it is classified under operating.
Next transaction is when we bought office supplies, which is a current asset, so we'll classify it under operating.
Then, we have collected commission income, which is also a regular activity under operating cycle, so it is also under operating.
The next one is the supplies expense, which does not affect our cash. Based on the explanation earlier, non-cash activities are not included, so we will not include this transaction under statement of cash flow.
Also, we have paid utilities expense, which is a regular activity of a business. So this is under normal operating cycle, so this is also under operating.
Then, we have sent a bill to customer but has not yet paid, so there is no cash involved. So we will also not include this transaction in the statement of cash flow. Remember that non-cash activities are not included. Be careful in doing your cash flow statement.
Lastly, we have paid the salaries of our employees, which is a regular activity under operating cycle. So again, this is under operating.
So to finally make the statement of cash flows, let us first start with the headings.
So the headings is composed of 3 lines. The name of the company, the name of the financial statement, and date.
After this, let's proceed to the cash flows. The first one listed are operating activities. So from our classification, let's list them with their amounts. Note that the parenthesis means decrease.
After listing, we have to compute for the total net inflow or outflow of cash from operating activities.
So, the same happens with the investing and financing activities.
After this, we have to compute for the total inflow or outflow of cash. Remember that when there is a parenthesis, it is minus because of decrease, and when it does not have, it is plus because of increase. Then, we have to add the beginning balance from last month. Since our business is a startup, we don't have a beginning balance. So let's put dash for 0.
Then, to complete everything, total the beginning cash balance and the net flow. Then, we'll arrive with the ending cash balance for the month of September.
There you have it! We have now our statement of cash flows using direct method.
We also have another method which is called indirect method, but we will discuss it on our next episode. Good luck, future accountants!